Lori Calvasina, well known to our audience, head of equity strategy at RBC Capital Markets, listening, as you always are wont to do, Lori, very patiently. Quite a rally in the last week or so, and I use that term lightly. I don't like the word rally, but that's kind of what we've had. Would you advise, or are you advising your clients, sell into this a little bit, maybe take some money off it?
I'm sitting on the sidelines right now. I mean, we hit my 2750 target on the S&P. I feel no urge to cut it. I feel no urge to raise it at this point. I'll tell you, just listening to the conversation about, kind of what in the world was this rally all about today. That's a big conversation we were having with the folks at RBC, and frankly, we've been having that conversation over the past week. I think a lot of this is just better news on the virus. I think that's legit. I think a lot of this is Fed-induced stimulus, feel-good reaction there. I think a lot of that's legit. But at the same time, I will tell you, it feels like that's starting to have run its course. And when I dissect the price action in the market today, it looked like it had a very defensive undercurrent. These MAGA stocks, FANG stocks, however we call them, those are secular growers. When we think that growth is not going to be good anytime soon, that's what a lot of investors cling to, and I absolutely saw that today. You also had a very strange mix of staples popping and short covering in the consumer discretionary names. That doesn't feel risk on. Russell was up, but it lagged the NASDAQ and the S&P pretty hard. This just didn't have a risk-on feel today. This felt like it had a nervous undercurrent with traders trying to have their foot on both sides of the trade.
Yeah, you look at, okay, so let's go to the MAGA trade, right? Microsoft, Apple, Amazon, Google. They're all very different companies, Lori. Let's be clear. Okay, Apple, for the most part, is almost entirely a consumer products company. That's it. Microsoft, almost entirely, with the exception of the Surface Pro tablet, which I'm heard is very good, actually, is almost entirely an enterprise company. Google is a advertising company. They don't actually have much in common at all, except that they're big and they're lumped into the same acronyms. But they were almost all up exactly the same amount today. Is it just kind of lazy investing?
I think it's a lazy stashing of the cash and just a way to kind of go back to the tried and true names that you think are not going to blow you up in the long term. We hear a lot of the phrase core holdings, talk to a lot of clients, especially over the last few weeks in the growth side of the market, that say, look, this pandemic is terrible, but it doesn't sort of make me change my long-term investment philosophy. I think it's a way of kind of getting some money back into the market. Things are starting to run. People don't want to miss the upside. But I wouldn't say there's anything more sophisticated to it than that.
Hey, Lori, it's Guy, and thanks for being here. So when the S&P reached its all-time high, 33.93, assuming we're going to get $160 worth of S&P 500 earnings, the market was trading close to 22 times. You can make an argument that we're not going to get anywhere near 160. Maybe we'll get 130, and so the market's trading at the same multiple. I understand the Fed backdrop. What's the right mix right now in terms of how you see the S&P 500 going forward?
Well, I think you bring a great point. I mean, one of the things we talked about in a note we put out late last week where we basically reiterated our target. We trimmed our earnings number for this year to 135. We said if you look at kind of our guesstimate for next year, stocks aren't cheap anymore. Our guesstimate for next year on earnings is 153. And there we had been down around a 14 times multiple on the March 23rd lows, and now we've popped back up to almost 18 times. So you're not crazy expensive, but you're not cheap. If you look at the market on, sort of this year's earnings, which we think is going to be about 135, you're right back up to the level that consistently marked the peak since basically 2013. So it feels to me like from a valuation perspective, a few weeks ago, a lot of people were trying to say, hey, I don't know what earnings are going to be, but I think stocks are cheap. It's hard to make that argument now.
We'll leave it there. Lori Calvasina, RBC Capital Markets, making a strong argument saying, be careful. Don't put a lot of money to work right here, Lori. We appreciate the candor and the views. See you soon. Thank you very much.
Thanks.
All right, we have got some big breaking news on the airlines and their relief package. Let's go to Phil LeBeau for more on that.
And Brian, remember that the CARES Act, which Congress passed a couple of weeks ago, put aside $50 billion to the airlines, basically cut in two pieces. One part, low-interest loans or loans backed by the government. That still needs to be determined. The first part, however, $25 billion in what they're calling payroll grants. Well, the Treasury Department has finalized the agreements with or not finalized, they've reached an agreement in principle with 10 major U.S. airlines, and we're starting to hear from those airlines now about what their agreement entails. They still need to be finalized, and how quickly they get the money out, that needs to be worked out. Let's start first off with American Airlines. It says that it will receive a total of $5.8 billion in aid. 1.7 of that will be in the form of a low-interest loan. Southwest says it will receive $3.2 billion in aid. $1 billion of that will be in a low-interest loan. We're also going to show you Alaska, Delta, United, JetBlue. We also expect to hear from them probably either tonight or in maybe some 8Ks that'll be filed. The airline grants, remember, they include 10-year low-interest loans, which make up about a third of the money that each of the airlines will be receiving. And also remember, the key provision here, Brian, is that the airlines, as part of getting these billions of dollars, agree not to have major layoffs until after September 30th. They'd like to avoid it altogether if they can, but we'll have to see what happens over the next couple of months. They've got a lifeline for now and have agreed that they will keep their payrolls in place at least until September 30th.
So, Phil, just to be clear, following the story, the change here is that, and correct me if I'm wrong, please, it was at the beginning sort of all just, here's the money. Now it's,
correct.
Here's the money, but a third of that has to be paid back. It's not all just a grant. There is a loan perspective. The taxpayer will get some of this back.
Right, and the government is also going to be receiving stock warrants from each airline, basically coming out to 3% of the value of the money that is being given to each of the airlines or loaned out to each of the airlines. Basically, that's what it comes out to. Now, whether or not the Treasury Department exercises those warrants right away, down the road, that's unclear at this point. But you're correct. The $25 billion payroll grants, it's not 100% money that the airlines do not have to repay. About a third of it they will have to repay.
All right, Phil LeBeau, the big breaking news there. Phil, thank you very much, buddy. Appreciate that. Steve Grasso, I say this tongue-in-cheek, taking warrants and equity stakes, it sounds like we're actually going to have an American airline, if you know what I mean. The U.S. government, the taxpayer, is now an equity partner. Oddly, today, Boeing did not go up again. Boeing actually fell a bunch of percent in an overall uptake. What do these stories tell you about airlines and Boeing? Tim Seymour. I meant Tim Seymour. What does this tell you about airlines and Boeing?
Never at a loss for words, Brian. So, first of all, I think we have to understand that the grant loan, of which possibly 10% of that is really where the warrants would be attached. So, if you think about this, I think the biggest thing you think about as an equity shareholder is dilution. I'm not worried about a 1% loan at a 5-year term. I think that's great news for the airlines. So ultimately, and every airline's not created the same because they all need a different amount of capital here. American Airlines needs the most, and yeah, they may be closest to American Airlines, but really based upon the numbers we have so far in the first tranche, we'd be looking at about a 3.5% dilution, and if you look at Delta, it's somewhere around a 1.5% dilution. So this news doesn't scare me. What would scare me is the controls the government has over these airlines. And remember, some of these airlines have done some pretty aggressive things and positive things over the last 5 years in terms of re-rating about how they've handled their balance sheet, how they've handled capacity, how they've handled, negotiating with unions and pilots. And there's been some painful things that have been done. But the government loans, once again, don't sound all that onerous here. And I think they're better for equity investors than people had expected.
And am I the only one, Tim Seymour, that can see when we all start getting on planes again that baggage fees might start to go up? I'm just wondering how they're going to pay these loans back.